Hey, good afternoon, everybody. I just wanted to welcome you to the next rendition of QA with Mike and Todd. Once again, I'm joined by Todd Lillo with Union Home Mortgage, and we're going to go over some additional topics for you today. So, thank everybody for, watching these videos. We have had a few questions that have come up because of these, and I just wanted to address one right now. So I had somebody ask about, if they're going to sell their house and they have their appliances, their hot water heater, furnace, central air are in good condition. They're in working condition, but they're older. Is that something that they should go ahead and potentially replace if they're going to sell their house? And the best thing to do that I typically advise people is, number one, make sure that they are in good working order. You can have them inspected. You should always have your HVAC system inspected every year anyway for safety, but just have them gone through. Make sure that if there is anything that needs to be taken care of, that it does get taken care of. And as long as everything is in good working order, that it's functional, just because it's older doesn't mean that it has to be replaced. I would highly recommend that you maybe potentially offer the house with a home warranty plan that we can talk to you about, that would potentially cover those items for a buyer for the first year that they own the home. So that may give them a little peace of mind for those things, rather than replacing them, because obviously it is a big cost. So again, I appreciate these questions that you guys are throwing out there, and we'd be happy to answer anything else as well. One of the things that we're going to talk about today, the main topic, is loan types. So there's obviously a lot of different loan programs out there, and I'll bring Todd in. He can kind of, roll us through those different options, the nuances, benefits, downfalls of each one. And Todd, take it away.
All right, I appreciate that, Mike. And to touch up on the question that the customer had about the appliances or the hot water heater, etc. In my world, you've heard beauty is in the eye of the beholder, and for us, the beholder is the appraiser. And no matter what type of loan we are doing, the appraisers are eyes and ears on a property. And that's changing these days and how much access they're going to have. But if the appraiser goes into a house and doesn't notice anything offhand about a hot water heater, if it's rusted at the top and just dented in or just disconnected, or it's very obvious, then that's going to get tagged. If the furnace doesn't kick on, because we need the utilities to be working, even on a conventional loan, that's a misnomer. Just because you're going conventional doesn't mean the house doesn't need to even pass a utility check. So appraiser's got to go in there, turn on the heat kicks on, turn on the hot water kicks on, turn on the lights kick on. So if you've got that covered and there's no real visible evidence of problems, and it's not 100%, but you're probably about 80 or 90% where you want to be. As far as loan types go, we've talked last month about everything we can't do anymore. Can't do this, can't do that. I wanted to talk today about what we can do, because I see what people are posting on Facebook, and that's here or there. I see what people are posting on Twitter, and it is true. Some banks are going to 20% down. That's it. 700, 720 credit score. That's it. They either want to slow down their production with the way the rates are right now, because we are wicked busy right now. I'll admit it. We're a little slow. Underwriting's a little slow. Processing's a little slow. Everybody's working from home, and we've got triple, sometimes 4 times the workload we've got right now. So a lot of banks are increasing their limits. They're also doing it to protect themselves from the forbearance issue we talked about before. So what can we still do? Government financing. I saw, a post, you need 700 credit score, you need 20% down. And I wrote back on that same post, no, you can do a 640 credit score with no down. And they wrote back to me, oh, I doubt that. And I just, oh, okay. Yeah, then I wrote back, I've been doing this 25 years, and I tried not to get into a fight there. But yeah, it's true. USDA, 640 score, good job time. We'd like to have you where you're at 2 years. If you're less than 2 years, that's okay. If you're in the same line of work. If you're less than 2 years and you're commissioned or you're self-employed, that's tricky. Sometimes you've got to do 2 full years of your self-employed or your commissioned income to show that you're going to be making a profit over the long haul with your tax returns. But USDA can do that. 640 score, you and I were talking about income limits. Some folks think income limits mean you can't make over 30 or 40,000 a year. USDA is very generous. 86,850 is the income limit for the year for the total family. That's 1 to 4 people. You can go up to 114,000 if you've got that 5th person and above. So the income limits are very generous on USDA. You can go no down. The house has to pass a basic inspection. It cannot be a manufactured home. It cannot have a cistern for a drinking water source. And it cannot be within 100 yards of a gas station. I'm trying to think of any little nuances there. I've had that happen a couple times to me in Willard, right there on Myrtle Avenue. So you can't be right next to a gas station. That's FHA as well. But it's possible. We're still doing those loans. We haven't raised the bar so high that folks can't buy a home with no down if their situation makes sense. And the VA product we love. You can go no money down on VA. That's very similar to USDA, except you do not have a monthly fee like USDA does. Veterans, VA, they have a chart. They did increase their fees recently to go with a VA loan. Now, first time use, you have to pay 2.3% of the loan amount, and that gets added into the loan amount. You don't have to come up with that cash. If you've used it more than once, it's 3.6% of the loan amount. So if you're doing a VA loan and you're saying, hey, I'm buying my house for $100,000, why is my loan amount 102 or 103? That's why. That extra amount goes to the VA. We order the appraisals straight through the VA. They have to pass a similar inspection as well. There's no income limits on a VA product, and we can help you. We can help the veteran order a couple of things. We need your DD-214, your discharge papers, and your certificate of eligibility. And there's a website the veteran can go on to. I believe it's called a VA portal, and they can grab that for us, and we can roll. You can do manufactured homes on VA. You can also do manufactured homes if you need on FHA. FHA is almost like everybody's friend. They've got a little bit of down payment, so they're not quite as good as USDA, but FHA doesn't have any income limits. FHA also allows us to increase debt ratios sometimes for customers that might have a little bit higher debt than others on car payments, etc. But I can get more files approved FHA than I can, sometimes USDA or even conventional. So FHA is a nice friend sometimes if we have a little bit higher debt ratio or we have income limit issues. Passing the same issues on a home. So all three of these products so far, same issues we look at on a home. I can do manufactured homes on FHA as well. There are 3% down conventional programs with Fannie Mae and Freddie Mac, Home Path, Home Ready, that are very nice programs. They do have lower income limits. They have a cheaper form of mortgage insurance, PMI. You just have to pass a first-time home buyer test. You do not have to be a first-time home buyer to get any of these products, though. It's just a first-time home buyer test you have to pass, and you get a cheaper PMI rate. So there's a lot of great products out there. You can't do the 600 credit scores anymore, with a couple months on the job and not much money in the bank. But you don't have to be, 20% down, 740 credit score, working at your job for 15 years. That's just not true.
Yeah, I mean, those are some awesome points there. So obviously there's a lot of programs out there. There's a lot of, differences between the two of them. And chances are there's something that, can work for everyone. One of the things you kind of hit on a little bit was, you can't have a cistern. Well, that's what the USDA loan, correct? However, VA will do those, correct?
Yeah.
I've got to do. Sorry, FHA.
FHA does. I've got to jump through a little bit of a hoop. I've got to. The appraisal has to have other homes that they compare it to, comparables that have a cistern, at least one or two of them. You can't be buying a home with a cistern and have an appraisal with 3 homes that have Northern Ohio rural water or regular water or a well. You have to compare at least a couple cisterns in there, and I have to get a letter from the county health board, which is easy around here, just stating that a cistern is normal and typical for this area. The folks that wrote this rule about these cisterns, I think they're probably in some big office somewhere years ago and thinking a cistern is somebody sitting on top of the roof, with a funnel funneling water into a still, heating it up so everybody can drink it. And that's not the case. Cisterns are nice. There's nothing wrong with them. Just USDA says no.
Yeah, and that's a good thing to know. I mean, I grew up in Willard, actually grew up with my grandfather and spent many years as a kid, and even when I got my driver's license for a long time, hauling water to people that had cisterns. That's what I did for a long time. I spent a lot of my childhood around the Willard area, Monroeville, any of these places, hauling water and rolling a lot of hose. And And so, yeah, I'm very familiar with what they are as well. Spent quite a few different days in them, personally as well, help cleaning them out, So, and with the expansion of Northern Ohio rural water in the area, they're not as, prominent as they used to be. I know everybody's really happy to have that, but there are still a lot of houses that do have them. So, it's just it's one little thing we got to get through, but by all means, it's a normal thing. We can show that, and we can get through it. And so it's a great point to bring up. As far as the gas station stuff you brought up, there's a lot of people that don't know that, and I think you and I have both been in those situations before where, unfortunately, there's been a house that's within that 300 feet of a gas station, and it doesn't matter whether you can see it or not. If they can show it on a map that it's within that and it's my understanding it's from the property line, not the house. I did hear that from an appraiser at one point.
It's from the closest point on the property to where the underground tank is buried. So, you and I have a bunch of maps of where these underground tanks are buried. That's Indiana Jones stuff. But, if you can come up with something like that, and we can show that it's a football field without the end zone away, then we can still roll and do it. If not, we switch gears. We got to go conventional 3% down.
Right. And another thing, Todd, that maybe you can, talk about a little bit as well, is for people that live in these rural areas, maybe somebody that lives next to a farm that has big grain bins. Is there not a limit on storage tank amounts for propane tanks, correct? For certain loans, can't be over 1,000 gallon.
Hazardous materials. Yeah. Hazardous materials. And it's again, if the appraiser tags it, if he's out there, he or she, hey, I'd like to note this, just like they note if it's close to a railroad track or close to certain businesses. What am I thinking? Those the wind generator propellers, something like that, that are popping up in some farm fields. Then the wind turbines, if they note it, then my underwriter is going to see it, and we're going to start investigating. And then you got to start getting letters. Is it safe? What's the distance? And it's not a road we want to roll
And
down.
what it comes down to is appraisers are our friends. We're not here picking on appraisers today. They have a job to do. Their job is to protect you as a consumer, and the banks as well. So they just want to make sure that when you're buying a home, that everything is safe, that the value is going to hold there, that there's not something that's going to negatively impact that property in the future for you. So, there's hurdles that we have to get through. Sometimes they're challenging. Sometimes they're easy to get through, but they're simply looking out for your well-being, and that's the important thing that we're trying to get to. So, obviously there's a lot of great programs out there. There are some things that are changing. This world is going to continually evolve with this. Rates are still, really good with a lot of programs from what I'm hearing, and you certainly absolutely do not have to have that perfect credit score and 20% down. Just like Todd said, there's options out there for you as a buyer.
And you talk to your local bank, you talk to your mortgage banker, and you're not going to know going in, oh, I'm gonna want to do a home path loan. I'm gonna want to do this loan. Just let us know your situation, and we will puzzle piece it and figure out, okay, this is the best situation for you. Here's plan A, here's plan B. We'll give you different options. Here's what'll happen if we can go USDA. Here's what'll happen if you go FHA. Here's what'll happen. USDA, I forgot to mention one important thing. There are certain spots in Ohio that the USDA can't go into, mainly big cities. Sandusky, city limits, if you get close to Mansfield, etc. But cities like the size of Norwalk, perfectly fine. All of Huron County is fine. So I forgot to mention that point, Mike. I'm sorry, but yeah, that's why sometimes I'll go FHA if you and I are doing a home in the middle of Mansfield and we got low down. We might have to put a little bit of down payment there. And good point. Yeah, good point about the appraisers. I never mind when they tag something. They tell us to jump, we just jump, say how high, and we go do it. We want the customers to know right off the bat if they need something taken care of when they're in that home.
All right. Sounds great. Todd, do you have anything else? I think we kind of hit on all of our good points today. Obviously, there's a lot more into all these programs. There's a lot more into the houses that are the requirements to meet these programs. We certainly don't have enough time today to get into all that, but that's why I'm here. That's why Todd's here. If you guys have any questions about, hey, will this program work for this house and vice versa, chances are we've either had that experience or we can find out, the answer pretty quick and say, yeah, this will work for you. No, it won't. And sometimes, we may just simply have to find you another home. If that's the program you have to use and it will not work for that program, then we'll just find a house that will work for you. If we can't make the program work around the house, but no matter what, we're here to help. If you guys have any questions, feel free to reach out anytime.
And we've run into, I've been doing this 25 years, so I've run into things 25 years on government loans, and I'm not perfect, but I can see some things down the road, and maybe we can avoid them, maybe we can go a different route, and we do the best we can, and try to make it as easy as possible for the customer. Thanks, Mike.
Sounds great. Well, hey, Todd, you have a wonderful day. Enjoy your night, and talk to you soon.
All right. Take care, buddy.
Take care.